Hey guys, and welcome back to another episode of the Growth Stock Investing Challenge. This is episode 3, and as of today, our growth portfolio on M1 Finance sits at a valuation of $1,851.33. The market opened about an hour ago, and we're currently down about $30.60. This kind of continues what we've seen over the last week, where the portfolio was down $50.79. I didn't really make any purchases since the last update. I do have a buy scheduled to go through this afternoon. I'm putting $30 in pretty much across the board with the exception of Academy Sports. The positions in this portfolio are all down, pretty much reflective of the markets at large, which kind of seen a downward trend, which I guess isn't entirely surprising since September historically has been a pretty poor returning month for the markets. This is for various reasons, but not, I guess, entirely surprising. I wouldn't be surprised maybe to see the market pull back a little bit more over this week, just like it did last week. But it's certainly something to keep an eye on as we move along. I really wanted to spend the bulk of this episode discussing two growth stocks that I really think I'll be buying a little more aggressively in the event of a full-on market crash or correction. And kind of the first one that I will be discussing is also the largest holding in this portfolio, which is Amazon. Amazon is a company that I really haven't bought too much of in the past. Of course, I wish I have because it's been a great performing stock for many years. But only recently I've really gotten into investing in Amazon. In fact, if you've watched my most recent dividend portfolio update series, I just added it to my Roth IRA, so it's a long-term buy and hold for me. I expect I'll be buying Amazon pretty aggressively over the next couple of months, and I'll kind of explain a little bit about why I am all of a sudden taking an interest in Amazon. So as we flip over here to Yahoo Finance, you can see Amazon's currently trading in the mid 3400s. This is a little bit off its all-time highs of 37.7308. Pretty much Amazon's been in a little bit of an interesting place for about the last year. It's been trading really flat, and that's kind of caused its valuations to look at least a little bit more attractive. The PE ratio is still very high at 60.29, but that's, again, for growth stock, something you can kind of live with because you're expecting those earnings to continue to rapidly increase for many years. Amazon, of course, is one of the largest companies in the world. It has a market cap of about $1.75 trillion. That puts it in, I believe, the top 5 overall, at least in the U.S. markets. So again, as I was saying, Amazon has traded extremely flat over the last year or so. So I'm going to show you that here. You can see the 200-day moving average is actually pretty well caught up to the 50-day moving average. This is not something you would expect out of a company like Amazon. But the growth, as far as a share price, has just not really been there. I don't really know exactly what has caused that. Amazon has continued to really perform admirably in all of its earning reports, and nothing in the business suggests that it is not growing. But an interesting thing to note is if you look at their 5-year chart, you can see back in 2018, 2019, they had another consolidation period before they really ripped up after the March 2020 crash. So we could be seeing something similar here if you're really into looking at the technical readouts of different charts. Again, this consolidation lasted about a year or so, just like this last one has. So we could be on the cusp of seeing Amazon maybe finally go on a bit of a bull run, and I wouldn't be surprised to see it top 4,000 in that event. I don't know if that's going to be happening in the near term. I would expect that probably closer to the winter Christmas season, because that's really obviously a strong season for them with everyone buying Christmas gifts, and just generally a lot of trade and retail buying is going on in that part of the year. So that's one thing I for sure wanted to note in this episode, that Amazon is definitely on the list of companies I'm looking to really start buying aggressively if it does kind of continue to pull back or stay flat. I started buying Amazon over the summer, and really I'm glad I did, and I really wish I would have bought more because some of these prices, even though, again, it is a high valuation with nearly a 60 PE ratio. I think that's pretty fair for Amazon at this point. I think it's one of the best companies in the world and the most well ran, while offering service that really no other company can really match. So the other company I'm wanting to talk a little bit about in this episode is actually the third largest position in my growth portfolio, which is Salesforce. Salesforce is actually probably a company that many of you aren't as familiar with as an Amazon. For pretty obvious reasons. Salesforce isn't really a consumer stock. It's mostly a business-to-business software stock. But I do think over the long haul, Salesforce will be one of the top companies to own for the next decade. In fact, investors are so bullish on Salesforce that it actually is a part of the Dow Jones 30. But Salesforce is, again, another interesting case of recent performance. It's been trading pretty flat for about the last year as well, and similar to Amazon. But Salesforce is, again, a little bit off its all-time highs of $275.22. It currently has a market cap of about $247.65 billion and has a very high PE ratio of 101.38. That could be part of the reason why we've seen Salesforce kind of trade flat over the last year or so. But again, I do believe in Salesforce's long-term ability to grow over the next decade. I think as we continue with the cloud computing and increasing reliance on software and overall just market algorithms, I think Salesforce will grow considerably. As we go in a little bit more to look at its technical chart, this is the 5-year growth of Salesforce. It's been trending way up over the last 5 years or so. Especially over 2020, we saw a huge spike from April into around last September to August. But over last year, it just really hasn't moved a whole lot. It's kind of been down, but recently has seen a little bit of an upward tick. We've actually seen a golden cross here, where the 50-day moving average has once again crossed the 200-day moving average. So this could be a little bit of a bullish indicator for the near term. If you are a more active swing trader, this might be a stock for you to look at. But I also think it has definitely a lot of appeal to long-term investors as well. I think it offers a solid mix of stability while also offering a lot of growth potential. Salesforce is probably a company that if it did see a prolonged bull run, could probably top that 275 all-time high and probably approach 300. I don't expect that in the near term, and probably not even by the end of the year, but maybe by summer of 2022 we could see Salesforce kind of start ripping up again. But I still believe that a market correction is very possible, especially by the end of this year. So this is another company that I will be buying pretty aggressively in the event that does occur. Again, it's not guaranteed. I'm not forecasting any doom and gloom, but market corrections are a natural part of a healthy equities market. So there's one thing I wanted to note. But again, these are the two stocks that I'm looking at the most aggressively in the event of that crash. So that's going to pretty well do it for this episode. I just kind of want to talk a little bit about these two stocks that I haven't really discussed on this channel too much. So if you did enjoy it, go ahead and drop a like as well as subscribe if you haven't already. Of course, I'll be making a video on Wednesday to update you on the performance of my dividend portfolio, so be on the lookout for that. I thank you guys for tuning in, and I will catch you later.